In today's video, I'm going over the closing disclosure. So if you have a closing disclosure, please bring that up so you can go section for section, line for line with me. My name is Duane Vizinau. I'm a national wholesale lender and a government certified underwriter. Let's go ahead and get into it. Okay, so the first section here, you can see we're going over on the top left, closing disclosure. And you can see here, it has the date issued, the closing date, which is the date that we are supposed to be closing. So you can see it's very close because the closing disclosure is supposed to be issued to you 3 days before the disbursement date. So you can see here, the 18th, the 21st, that's 3 days, which is why it's so close in the timing there. The settlement agent, will be the name of the title company used. If there's a loan number associated, it would be right here. The property address would be right here as well. And then you have your sales price of $1,250,000. Now, this section is where you can see this form is a statement of final loan terms and closing costs. Compare this with the loan estimate. So this is where you're going to compare the loan estimate that you receive with the closing disclosure. And what's great about the closing disclosure is it will tell you if anything has changed. And I will show you that later on in the presentation. So the transaction information, you can see the borrower's name, which would be the applicant, your name, the seller's name. This should match on the purchase contract, whoever name is on the purchase contract, as well as the property address here, the lender, whoever the lender that you are using to underwrite and close your loan. Then we have the loan information section. This is a 30-year loan. It's a purchase on a fixed rate. Now, the difference between this one and the loan estimate is that it does not have that section asking if the interest rate is locked, because you cannot get a closing disclosure unless your interest rate is locked. So this is 100% locked. You can see here the conventional loan is checked. The loan number would be right here as well. All right, so let's go over the loan terms here. So your loan amount is $1 million. Then you have your interest rate of 6.5%. And then this is your monthly principal and interest payment, not taxes and insurance. Your principal and interest is $6,320.68. And again, if there was a prepayment penalty or a balloon payment, that information would be disclosed right here. Projected payments. So this is what your payments are going to look like. And you can see right here for the next 30 years. If this was an adjustable rate, a 5-year or 7-year, it would have year 1 through 5 or 1 through 7, and then so on after the adjustable rate loan term. But this is a 30-year fix. So years 1 through 30, meaning that your payment will not change. Your principal and interest payment is $6,320.68. Now, this individual put down 20%, so there is no mortgage insurance. Now, this section, the escrow. So this one I used as an example of someone who did not want the escrow account. If you want to see what it will look like having the escrow account, go ahead and watch my loan estimate video where it shows you exactly what your estimated escrow payment would be. But because this closing disclosure does not have that, that means that the insurance, homeowner's insurance, and the property taxes are paid separately outside of the mortgage payment. Your homeowner's insurance is due every once a year, covering a full 12-month premium, and then your property taxes are paid every 6 months. Now, this section still is going to show you what your taxes and insurance are going to be, even though you don't have the escrow account, because you still have to get pre-approved based on the full payment. Even if not having the escrow account, when your debt to income is measured, it's still going to be based on the total PITI, principal, interest, taxes, and insurance. But you can see on this one, there is no escrow account. So nothing will be collected for this account, but this is how much you will be paying in taxes and insurance. All right, now we're going to talk about the cost of closing, and this is your closing costs, which we're about to get into, which comes to $15,806.38. Then your cash to close is $201,880.68. Now, loan costs. Now, this is the section where you are going to compare with other lenders because, again, Section A is the area origination charges where most lenders have some type of control of. Now, you can see that this one has a small amount of points being paid. And if your lender told you there was no points, then this should be zero. Now, this can either be called an administration fee or an underwriting fee. Now, this is the fee associated with the lender that me, the loan officer, chose to submit your loan to. And again, I'm a wholesale lender, so I work with multiple lending institutions, and some of them call them an administration fee or an underwriting fee. But just know that this is not a fee that I charge as a loan officer. You would see if there's a broker compensation here, which is a fee that I would charge if this was on here, and tax service fees. Okay, now Section B, services you cannot shop for or did not shop for. And again, these are on Section B, you cannot shop for any of these fees. So you will see right here that you have one line and one line here. This is typically going to be pushed the appraisal fee on the right side because you paid that up front. So that means that this shows that you've already paid it. So this is not going to be added on for additional costs at closing because you prepaid this. Okay, so I also added this 442 reinspection fee, and that is should the appraiser list any repairs needed to be done on the property, then the appraiser is required to go back out to the property and reinspect, and this is a fee that you do have to pay. And then the appraisal fee right here, credit report fee, flood cert, the MERS registration fee. This is how a database where it lists any type of home ownership that you have. And this is how lenders know if you have ownership of any other property. So make sure that you are upfront and disclose it on the application because lenders will know. And if there's a processor processing the loan, then that processing fee would be right there. Services you did shop for. So these are all title fees again, as I explained on the loan estimate, and you can shop for these, but these are just applicable title fees. You can see the mobile notary fee right here, and that should a mobile notary come to your house or any location that you would like to sign, they charge this fee to pay for that notary. Okay, Section D is the total loan cost of A, B plus C, and that comes to $7,048.50. And you can see that this was the appraisal. It's not included in that because you already paid, but it is included in the total cost. But A, B plus C will be this section, and this is how much you would have to bring at closing minus the appraisal fee because, again, that was prepaid. Before we move forward, if you are seeking to get pre-approved, you have 3 ways you can access my online application. You can see the barcode you can scan. You can also go to my website. My website has other videos for you to access and additional information about the whole loan process. And you can also click the link in my bio. I love to assist. And again, if you have a closing disclosure you'd like me to help out, go ahead and scan that Zoom barcode and we can go over that together line for line. Okay, now on the other costs, Section E, these are taxes and government fees. If there were a transfer tax, it would be on this section, and this is just a record with the county. Section F, prepaids here. So here you have to prepay 12 months of your homeowner's insurance up front, whether you have an escrow account or not. Then there's no mortgage insurance on this loan. The prepaid interest is based on the day of the month you close within that month. So if you closed on the 15th day of the month and there's 30 days left, 30 days in the month and 15 more days left, then you have to pay 15 days of interest. And this can change if your closing date changes or whatnot. This is a figure that can change on your loan estimate to your closing disclosure. Property taxes, if there were any property taxes due, and that depends on the time of the year that you close, what month you close. If there are taxes coming up due when you take ownership, then you'll have to pay those. So beware of that depending on the month that you close. And you want to gauge that by the time that the county collects property taxes. Now here, this client actually had to get extra insurance, and that's because homeowners insurance, and that's because they're in a fire zone. So in California, we have the California Fair Plan. So this is the California Fair Plan, and then they have their basic homeowners insurance. So if you have both, then those are both collected as well. All right, Section G, and this is the initial escrow payment at closing. And because the borrower selected no on not having any type of escrow account, nothing is collected, which actually lowers your closing costs. So if you are able to waive this and you want to waive the escrow account because nothing is collected, then that lowers again your closing costs. But that just means that you have to make your separate payments for your homeowner's insurance and your your property taxes. Okay, Section H, other. Now, this is where you'll see if there's any real estate commission that you are paying. That you'll see on the on the closing disclosure, there's a whole section for the seller. We're only going over the borrower section, and typically the seller pays for the commissions. But if you are paying any real estate commissions as a borrower, it would be on this section right here showing that you are paying those. And if there's any other applicable fees that you are paying, utility bills, HOA dues, or anything like that, they would be in this section. Also, you can see the owner's title insurance, which is optional. I discussed this in the loan estimate. This is to make sure that no previous heirs or anyone can come out and say that they are the rightful owner of the property. It also pays for any attorney, lawyer fees. So please do not waive this. It's to safeguard and make sure that you are the rightful owner of that property moving forward. All right, so Section I is the total cost, E, F, G, and H all together, and that comes to the $8,947.88. Okay, so now Section J is the total of all the closing costs, and this is D plus I. D was A, B, and C. I was E, F, G, H, and those together come to the $15,196.38. This is the appraisal that was prepaid. So again, you're not being charged twice for the appraisal. And this is from additional lender credits on the loan, should there be any excess that came from the interest rate that you selected. Okay, so this section is different from the loan estimate because it gives you the amount that was on the loan estimate and then the final amount. And this is how you can see if anything has changed. And on this one, it's gone down. And that's because at one time, I believe there was an escrow account on here. So that got removed. And then some additional costs were paid up front, like the homeowner's insurance. They have to pay that up front. So some of these came down. So you can typically see that this figure will come down lower from the loan estimate to the final. But this is how you compare the two. Now, this section is where you will definitely know if anything changed from the loan estimate. And this says, did this change? If anything on here says yes, then it did change. And it tells you exactly what section changed from the loan estimate to the other. So this is a perfect way for you to revert back to the loan estimate, take a look at it and say, you don't have to guess. The closing disclosure pretty much spelled it out for you. So you exactly know where to go. Loan calculation. So these are the total payments that you'll be making on the life of the loan. So almost double, well, actually more than double than the loan amount that you are selected to have. These are your finance charges, the dollar amount the loan will cost you. You can see right here, the amount financed in total is 993,650.62. And then the APR, this again is how you know if you're getting a no-cost loan or not. Your fees are expressed as a rate. So they're going to be on top of your interest rate. I lock this in at 6.5%. So the fees on this loan come to 0.61%, which is very low. If it was a no cost, then it would just be at 6.5%. So this is how you know if you're getting a loan that has high fees or not. If this was at 7%, then you know that your fees as a rate expressed as a rate is 0.5%. So this one can tell you that they did not pay a lot in fees. Then the total interest percentage that you are paying over the life of the loan is 127.74%. there you have it, the closing disclosure. I hope this helped you out. And again, if you do have a closing disclosure, please be sure to scan that Zoom barcode if you'd like to go over with me one-on-one. And as usual, if you feel like this information was useful, please like and subscribe, and I'll see you on the next video.